Yeah, and of course the context is a slowdown in China consumer spending, these deflationary risks that are clearly front and center given that we saw both producer prices and consumer prices falling in tandem for the first time in many years.
Welcome back. As you can hear, we've got quite a bit of negativity out there in front of Alibaba earnings, and I did a video on that yesterday that I think it's an important milestone to watch for the whole China space, but also we get the US inflation print, so the whole topic about risk assets, is it risk on and risk off, which of course the Chinese equities are part of this category, will be important to watch today. In this video, I want to quickly give you my opinion on the topic of investor expectations and the Chinese economy and stimulus. I want to offer kind of a little bit of a different viewpoint here because when I met with one of the chief economists of a bank in Shanghai, he basically told me this, and I think it was worth thinking about that. Currently, the Chinese government doesn't think that the economy in China is as bad as it's portrayed in the media. So this is the real reason why we haven't seen a very large stimulus. And I know the investor expectations from a Western point of view are actually that we're going to see something similar that happened in the US, like money printing, stimulus checks, free money basically, right? But I'd argue we're not going to see that. And possibly this will be a learning process for investors here. And I also tweeted out today, the CSRC is now scheduled another planning meeting or press conference regarding the real estate market on Friday. And I noticed that this is becoming more and more of a phenomena that the Chinese ministries, regulators and the policymakers in general, that come out more often and speak about these matters. And I think this is the actual stimulus. That's the way I think about it. We need more of those kind of meetings actually to happen on a more frequent basis. Ideally, every Monday, every Friday. And that's what we should have as an expectation, because this is fundamentally a crisis of confidence. Because there's a little bit of a gap also in between what is said in the media and what's the reality. For example, just we had Disney earnings, and they mentioned in there's a weakness in the US numbers. It's partially set off by what's coming from China and Shanghai. Can you believe it? I mean, if you would look at the news, you would certainly not get this kind of a feeling, right? So if we get some more of these meetings, I would argue, and not necessarily, lots of stimulus, free checks and coupons, but instead more of these reassuring meetings on top of, hopefully, let's say, good numbers today, for example, for Alibaba, but also Disney, those type of things. That in combination, I think, could establish confidence again and give a little bit more traction under this, what I think is an early bull market for Chinese equities to emerge. That is just my personal opinion. I thought it's good to give you a different viewpoint out there. I hope you enjoy that. Let me know in the comments what you personally think about, and then we have an exciting day in front of us. Thanks for watching. Please subscribe to the channel. This is also where you hit the like button, and then see you in my next video.